All right, so we're going to go over a potential swing trade for Nike. Potential swing trade here for Nike. Just give me 1 second. So there's an opportunity here to swing trade Nike. So we just want to go over some of the opportunities we have and how we can make some money swing trading Nike. So I'm live on YouTube if you want to get a better picture. We're gonna just go over a few opportunities we can take advantage of swing trading Nike here real quick. Okay, so recently the market has kind of been bearish. There's been a lot of stocks that have come down. It seems like there's some positive news in the market right now, so that's why I want to try to take advantage of a swing trade. But I'm still not 100% positive that we're back like in a uptrend or in a bull market yet. There are some positive signs with the bond yields and kind of the some of the representatives came out and saying that the debt and inflation isn't as bad as they thought. So we're going to try to take advantage of a swing trade here. We have ticker symbol NKE, Nike. Is one of the trades that I like. I think there's potential to make money on this trade, and there's a responsible way, even if the news isn't great, where you can minimize your risk. So let's take a look at Nike. It recently was trading up here at 167, fell all the way down, to 140, and it bounced at 140 and 144, and that has been very, very strong support. Like if we go back here, I'm going to go back here to January, February, and March. Check out all three times it hit this area here, bounced, hit it, bounced, hit it, bounced, and it was resistance. All three times that it attempted to break that, it was resistance, resistance, resistance. So this has been like a strong symbol that this has been, every time it hit this resistance, it wasn't breaking it. Then it fell down here and it finally broke it for the first time and just went on this run, bounced. See here, now that resistance area became support. So for swing trades, that's one of my favorite signals when you see that clear resistance here, like here in the past, resistance now becomes support. You see here, we're marking the same area. It landed here, and now, as previous, it was resistance. It now became support. So that's a very, very bearish sign, and that's something you like to see if you swing trading. So it bounced right off of that from 144 and went all the way to 179, a big opportunity to make money there. So my thesis is that it tested this area again and it dropped below it a little bit. You see here, but it quickly, just a couple days later, broke above it. So I think that this is a decent opportunity right now. The stock market is optimistic. So I think in combo of that, I think this is a potential swing trade, and I'm going to give you some different scenarios on how you can trade Nike. What's up, King? So if you want to wait a little bit, if you want to wait, because I have to tell you that, there is at any time, let's say like in March, if the government comes out and says that there's going to be another interest rate hike, all these stocks are going down. A lot of these stocks are going to go down. Not all of them, but a lot of these stocks are going to go down. So you have to keep that in mind. That's why I haven't made a swing trade video in a while. So I just want you to understand that. So if you want to wait, you can wait till this resistance is breaks. So right now this is soft resistance, But if you want to wait a day and see if this is if the breaks off of this, then that's another bearish sign. But we do have, I will tell you, we have multiple bullish signs. Excuse me. We have multiple bullish signs. If we look here on the stochastic, it's on an uptrend on the stochastic. That's number one. It's bounced off support, and the support was strong resistance in the past. So that's the second positive sign. And it's about to break this little resistance here. So there's a lot of traders looking at this. So it may be an opportunity to trade this. So those are some of the signs that you can watch out for. Now, let me give you on a few ways to trade this. You can just buy the stock outright if you want. And that has some risk, but it's also minimal risk, because if it drops, the most it'll probably drop is 140 unless some crazy news comes out. And that's something that's unpredictable. If you want to trade it with longs, so you can buy a long call, and I would buy the March 18th. I would buy, this is Nike stock for TikTok. I would buy the March 18th stock and the $150 call. And let's look at the risk and reward for that. So on this options calculator thing here, on day one, if you buy that and it drops, your worst case scenario, it drops to 140 area, 142 if you hold it that long. But I think it's strong support, that 140 area. You have the potential of losing a couple $100. I think potentially, if we look at here, 155 is a potential mark, potential area where I think it's going to hit. I think if it breaks this small resistance here, if the uptrend continues, I think this 155 is going to be tested. I don't feel that it's going to get back up to these highs just yet. This is a short-term trade, but I do think that 155 here is a potential sell area. So you want to get in 148 and you want to take your profit at 155. And now the reason I have such a small area for profit, because I don't know how the market's going to react. I'm still iffy. I haven't done a swing trade in a while because of all the fear of rate hikes, interest rate hikes, which is not great for growth stocks. But I think we're a little bit past that. I think we're going to have a few good months. So you can just buy a long call if you want. Just make sure you understand the risks. So here your target 155. So within the next week or two, if it hits that 155, depending on how many contracts you buy, you have the potential of making 358, 345, over $300. So if you wanted to buy, let's say, 5 calls, you have the potential of making $1,500, but you also increase your risk here of losing money. The next thing you can try to do, if you're a little skeptical and don't want to risk as much, you can do a credit spread. So that means that you'll buy the March 18th 150 put at $6.90 or whatever it's selling at by tomorrow. And you can also sell the 155 put March 18th, and that gives you a $3 net credit, meaning you collect $300. So here we go. So let's say it just has to stay above $148 for you to be profitable. So if at any point it drops below 148, you're going to be in the red. But if it stays above 150, you can make profit pretty early and pretty quick with that. This one is high risk. It's only a 40% chance of profitability. So this is not my favorite play. I'm kind of having my favorite plays in order here. I think a put spread here is the safest if you're really, really worried about the stock market crashing. So a put spread would look like this. You would sell a February 18th 139 put, and you would also buy a February 18th 138 put, which would give you 11-cent net credit. Now look at the profitability of profit on that one. It's 88%. So you're limiting your risk. You're increasing your chance of profit, but you're also decreasing your chance of making a lot more profit. So you're decreasing your risk, also decreasing your profit. But look, even if it dropped all the way to 139 by expiration, you're still in the green. So look at, this is like the safest in this type of environment if you're worried about it. I mean, but this is only $11. So you have to buy a bunch of them to in order to be, to make some money, to make it worth it. So that's a really good play if you're really really worried about like a Netflix type of thing happening where it just crashes, which I doubt. They do have earnings coming up, but I doubt it's going to happen. Anything like Netflix is going to happen. And then the best, to me, the best play if you're bullish on Nike, I think Nike is a good play. I think Nike's a good long hold. You can just sell a put. So selling a put, what that does is, if I'm saying I like Nike as a company, I'm bullish, but I want to buy it at this area here. Like if I wanted to buy Nike, I would want to buy Nike around this 130 area. I think, look at this, all this support in this area. And I think intrinsically, I think that's a good deal getting in at Nike at this price. So with the long put strategy, you sell a put. So you write a put. If you're using Robinhood, you can sell, or Webull, you can sell puts. So you would sell a put, and I would say sell the March 18th 130 put, and that would basically give you, look at the profitability for that. There's a 93% chance that you're going to be profitable if you sell a put at 130. That's, there's not many trades where you have such a high probability of making money. So look at why the potential of making money. In order for you to lose money with selling this put strategy, let's say you hold it all the way to March 18th and it drops all the way down to, it has to drop all the way down to 136, 127 for you to lose money. And you really, even if it drops that low, you don't lose that money. You're going to get exercise. So that means you have to have in your account 100 times 130, because you have to buy 100 shares at 130 because you sold the put at that price if you get exercised. And you're basically getting 100 shares at 130 on a stock that you were bullish on anyways. So this is the best, one of the best strategies. Now let's just say by the time it gets to this area, it stays around 144, and you don't get to keep the stocks. You're not going to get exercise, but you keep the credit for what you sold it. So you sold it for 129, you keep the $129. So if you have the money to do, like, let's say 5 contracts, if you do 5 contracts, though, you realize you have to be able to, if you get exercise, you have to be able to buy 500 shares of Nike at $130 or wherever you decide to sell the put. So to me, this is like, going in order from riskiest to less riskiest. This is the least amount of risk. You see here, even statistically, you have a 93% chance of being profitable. So no matter what happens, if it, let's say, skyrockets up to 157, well, you're not going to get the 100 shares, but you're going to get to keep the amount of money that you sold or you wrote this put for. So you wrote the put for $130. It skyrockets. You don't get the shares, but you get to keep the amount that you wrote it for. So there's not many trades in swing trading or the stock market or day trading that you have a 93% chance of being profitable. So this is the strategy that I'm choosing out of, you can choose anyone. You can, we can look at the chart here. I do feel like it's going to be bullish. So, but I'm scared to just buy stocks. I'm scared to just buy a call because we've had so much uncertainty in the market. So I'm saying, you know what? I'm going to okay, where there's a lot of support here at 130, I'm going to say I'm going to sell a put down here. And if it drops down, it has to drop all the way below it for me to lose money. And even then, I'm not losing because I'm just going to get exercise and I buy the stock at 130, which is what I'm okay with. Now, if my thesis is right and it does go up, then that's fine. I still make $130 for the contract that I wrote. It's really just a win-win situation in my opinion. And that was it. If there's any questions, you can post them in the chat. If not, then that was just a quick recap on the potential swing trade for Nike. There are a few other stocks too that I was looking at that are just kind of like enjoying the. I think it's a temporary kind of bullish trend that we might have, just because of some of the way some of our government was talking regards to inflation and inflation not being too bad. I think inflation is terrible right now. I think we're going to be, just inflation is just going to keep going up a little bit. But they're not raising interest right now. So right now people are enjoying the market. If there's no questions, no tickers that anyone has any questions on, this was kind of like my swing trade for the week. And my favorite is selling a put at 130. And thank you for joining my live, and see you on the next video.